All right, I think we're live. Mitch, thanks so much for joining the podcast here today.
Glad to be here, Nick. Thanks for having me.
Love it. Very exciting episode to talk about your career, talk about your break from tech and moving into, I don't know, should I call it day trading? What should I call it here?
Absolutely. Some call it
Yeah,
gambling, whatever,
gambling.
whatever you want to.
Yeah, I love that. I think a lot of people are wondering what happened to Mitch, and we're going to get the full scoop here today. Before we get into it, if you're watching this on LinkedIn, if you're watching this on YouTube, guys, you know what to do. You need to hit that like button. You need to hit that subscribe button. As of recording this, we have 146 subscribers. I know it's peanuts here, but they're my peanuts. So we're excited about this. And yeah, let's get into it. So Mitch, for those who don't know you, who are you? What do you do? And then we'll get into your background.
Yeah, absolutely. So first, subscribe. Let's see if we can get the highest ad rate for all your podcast here. That would be cool. Mitchell Wall, I've been, like he said, Nick and I know each other from OneTrust days. I spent the first part of my career out of college. I graduated in 2012. I started at a company called Internap, co-location and data center space. Did that at another company. Was going to take some time off when my first girl was born in, I think, 2017, and a recruiter called me about OneTrust. Those days, I think we were maybe sub 150 people in 2017. So got to experience a startup from I guess, a more experienced level, me having more experience versus when I went in straight out of college, not knowing what I was doing. And then got moved into a position over there that allowed me to really understand the third-party risk management space, as well as go from, an SMB mid-market sales rep to rolling up directly to the CEO over there. And that was about the time everything changed. I started to learn, gain a lot of confidence working directly with him. You know him well. He has a lot of energy, and he really kind of spurred a movement that hit where I was in my relationship with him and what we were accomplishing, combined with COVID sending us home and me being a huge family man, not knowing whether or not this was the end of the world, traveling a lot and then not traveling and having to figure that out. I've never worked remote. My wife has a good job. We had a girl that was out of school because of COVID and we couldn't both do sales calls. So I'd always traded, a little bit here and there since I graduated college. Whenever I had a little extra money, I used some of the commission checks that I got right before COVID. Dove in, it started working. I figured out a plan, and I was able to leave with some big ideas ahead. And then over the course of 20 to 22, I happened to hit like the best bull market ever, right at in the nick of time. And that's allowed me. We had another girl. It's allowed me to really focus on what's most important to me, which is, I guess, probably what you're asking about, is my family. Having a wife with 2 young girls. And a whole crazy new world that we're living in. I make sure to keep close to home, make sure that I spend my family time together. We eat dinner every night, most nights together. I'm trying to put family first ahead of everything. And I think when I was caught up, in those 100-mile-an-hour days at OneTrust early on, I was making good money. I was having a good time, and I ended up kind of forgetting about that piece of it. So COVID settled me. I had 2 really successful years, but the interest of wheeling and dealing and shaking hands in the channel world for third-party risk management was just too great, and an opportunity too good came about. So I decided to come back in and look at it as kind of like a longer-term investment.
Yeah, I love that, Mitch. I'm going to dig in a little more into your sales background here, but I know when we got coffee maybe a month ago, 6 weeks ago, something like that, you were telling me you're coming back from the golf course one day and your wife was like, don't you think you're still young? Don't you think you're too young to be retired? Maybe you should get back in the corporate world.
Yeah, I think I'm the only person that didn't refer to what I did as retirement. But I probably was most certainly retired. It was a little less of the dividend stocks and more of the aggressive trading for income, for sure. But yeah, I just feel like right now with what I know in third-party risk, and I found a product that I really think solves a problem that we were unable to solve when, a couple of me and some others at OneTrust were really trying to build out what that channel program looked like, and maybe what that exchange and how you solve those problems. We talked to a lot of people at top firms and just could not. It wasn't for a lack of effort. It's just business things get prioritized, and I think we were on the right track. But about a year ago, I found this company that I've been kind of watching for a year and seeing what they were doing with the markets moving and stuff. And I wasn't ready to jump in, but they have a tool that really solves a big time problem in the world of risk assessments, which I'm sure you're familiar with over at Grant Thornton. So,
yeah, love that. Awesome, man. So today let's talk about, out of school, going into sales. I've always wondered about sales guys, if you will, and like, how do you get into sales? What does that first sales job look like? We're going to talk about, we'll probably share some fun stories of our startup days. And then I want to spend most of this conversation, you educating me on your technical analysis on day trading, how you manage risk, what does that look like? And yeah, it's kind of something people talk about, but I've never really tried to learn what it really means here. So we'll spend a lot of time going through that. So yeah, Mitch, from the start, where'd you go to school? Georgia boy?
University of West Georgia. So I'm born and raised Metro Atlanta, and I'm from Lawrenceville. Really wanted to go to Georgia. That was like the school was like a couple miles away, but had a good time in high school, and probably didn't buckle down as much as I needed to. I just thought it was like a shoe-in, which it clearly wasn't. Went to West Georgia with I'll take a couple credits and then go over. But I joined a fraternity and met a lot of really good people. It was a kind of a turning point in my life where some things were going on. So I never really felt the need to leave. I felt really comfortable, and now I've probably been, groomsman in 7 to 8 of those guys' weddings, and same for them with me. So, it was just something I was willing to stick around for. And go Dogs all the way. I'm a huge dog fan, but yeah, West Georgia Wolves.
Love that. Well, we'll say go Panthers, go Georgia State.
Yeah, there you go. Yeah.
So in school, what are you studying, and what makes you want to go into kind of the sales field?
So it was business management. Not a typical, but a common kind of career or college path for a sales rep. And I had some classes where we had some international, the core classes are what they are. And then you get in, year 2 and 3 and 4, and you start to really get into classes that you like. And I had this international business class with this professor who just had like this, it's stupid reference here, but Wolf of Wall Street vibe. Like, let's go. Like business is fun and it's exciting. And how do we make this money, and how do we connect this supply chain to this corporation and expand margins and all this stuff that was pretty new that I kind of, but it was kind of his passion of what it could be that really got me. So we had this project, me and a couple of other classmates, we blew it out of the water. It was really like how you would build a business and why it would be successful and all this stuff. I think it was like a retailer that we ended up going with. But that just got the itch. And then, out of school, I truly believe your network is very important. So a fraternity brother of mine was in the tech space at Internet, got me in the door as a BDR. So I took the BDR to corporate account executive, to senior account executive, and then went over to OneTrust, did the account executive thing there. But then it switched the channel in about 2019, which is way better than sales. Way better.
Awesome. So kind of live the BDR life, cold calling, maybe some inbound outreach as well.
Yeah, you get paid on the BDR role is like qualified leads. So your sales rep had to accept it, which I've been to some other organizations where it's just like get a meeting and that counts. But the qualification part, that really helped. And we were on the sales floor. Now it's, I guess, like not all companies have that like boiler room type feel. It was always super professional and there was never like any harassment or anything, but like people celebrated wins and like called you out for bad calls. And it was really a way to develop how you communicate to customers. And it also kind of, I had like that anxiety of like, hello, can you go to a room or something to make your calls?
Yeah.
And the best way to get over that is just like do it in front of people and get criticized. coming into OneTrust, I would have my neighbors like watch me pitch the Cookie Pro when I like my first week, because I wanted to make sure that I was able to communicate it the right way and not be nervous. And you're not going to be more nervous than you are in front of your friends, but that's the best way to learn. So.
Yeah, I love that. And it's all about just kind of putting it out there and being able to take feedback and adapt and kind of growing with that message and learning to master it. And, I imagine from BDR, you really master that message to get people interested, and then you start taking accounts full cycle. Is that right?
Yeah, I would say that I probably didn't master the messaging, but like was confident enough in it and did it enough times that statistics worked in my favor. But I guess that was then. Now, yeah, certainly I look back and hearing the different no's and the ways to sell, and now it kind of just comes natural. But yeah, then you're trying to master that so that you can move it into that qualified lead, which I think I was there for maybe 6-7 months, got moved in the account executive. And then you feel awesome because all those guys that like criticize your leads that you thought were good, you got those coming to you. So you can start to qualify and say, oh, well, actually it wasn't that good because this IG director wanted to have a conversation or a coffee. Like that doesn't mean you're going to sell a deal. So you kind of start to learn, expand your knowledge on more than just prospecting to, okay, I've prospected, which is still, I think, the key to all sales. Like you have to have that piece ingrained in you. And I think that you probably find the best sales reps that come from that BDR role or worked closely with the BDR in their first role to understand how important it is. And you can read sales books and listen to podcasts, and that prospecting piece is going to be like the number one. It's just like working out consistently, it takes a week to feel like you are out of shape, but it takes months to get in shape. So you gotta stay consistent on that outbound. But yeah, you learn the whole sales cycle, and then you start talking to people that you think are high up, within like a small startup, and you kind of get that nerve, and then you feel confident because you do that, and then you take that and you're able to go to a higher, a C-suite at an enterprise or a Fortune 100 company, and you're like, oh, why is this CEO any different than the CEO? And you start, that for me anyways, my experience was the more I had conversations with people at different levels and heard their opinions and whether or not what I was saying was stupid or whether or not what I had to sell was great. I've kind of come to a culmination of all of that. And then again, moving into a role that's relationship focused at OneTrust when I moved over into the channel from that, typical sales rep, to move into a role where you're relationship focused and you've been with these high up executives before, so you know how to do that. But then you combine, now you're rolling up to your high executive, right? I'd never, there's always been like 7 managers or something between me and the leadership. So, I get in there and I think technically I rolled up to the sales manager, but he pulls me in there. He's like, look, this is a project that you and I are working on. And then we pulled in a couple others. But it allowed me to now kind of sponge that up and learn what it takes to, it was one specific thing he said to me after a bunch of meetings. He's like, do you realize that you just put us in front of all of these key executives at these major big 4 firms and down? We spent a week in New York just popping around all these major firms. And he was like, there's nobody else left in the industry. Like you've talked to everybody that I asked you to talk to. And a part of that was like, I was so like pumped to do it for him. But another part was, and this is the key to where I am now, is that the industry is in need of certain things. And we were trying to create something that the industry needed. And so they were very receptive because, I've caught a lot of like executive level people that just say, get out of here. But for some reason, all of these partners and principals at these major firms were very receptive. Come to find out, it's because we were actually trying to solve like a really legitimate problem that the industry is facing. So
yeah, that's awesome.
Might have jumped around a little bit.
No, I love it, man. So yeah, you move over to OneTrust in kind of like an SMB sales role. You get tapped on the shoulder to go build out this channel program for the third-party risk market, bringing on board all the big 4, signing them up in the industry onto the channel program, and just crushing it. I mean, Mitch is the guy, and he's getting all the accounts signed up here. So this is probably 2017, 2018, 2019.
Mid 2018, I think, is when I made the switch. And the reason was because, over there at that time, it kind of felt like everybody was hitting quota. You know what I mean? Like that thing was flying off the shelf. And then what I was finding is in that SMB role, you kind of had that variety of products to sell into. Again, the people that were most receptive, at least the message that I was putting out there, was those third-party risk people. So we were like ripping, replacing from all these major firms. And at that time, it was kind of just a piece of the product. So I actually went to him, or the sales leader at the time, and said, like, every one of my deals is basically this. Like, can I focus on just selling this? I think I'll be more productive. And they basically said, we have a plan to do that, but we kind of need to make some connections in the industry and learn more about it before we break into offerings about certain things. And so I guess I asked the question at the right time. 2 or 3 days later, my sales manager approached me and was like, hey, listen, this has nothing to do with you leaving my team. I want you on my team, but I think I have a really good opportunity with you. The CEO wants to meet with you and pitch an idea. And so it's kind of like, look, we don't know what we don't know, so I need you to figure it out. Yeah. And that's basically all he said. And then he kind of gave me an outline of what we were looking to build, like that exchange. And he's like, we don't know how we're gonna do it, so figure that out too. Here's your technical resource. He was the offering manager at the time, or that was when the offering managing started. It's crazy to think about how many people was over there now. Like, that was in a room of like 20 people. It's when like the chairman came in, and I don't know if you recall that. Maybe we had just moved into the new office, and so it was like I got that announcement. They announced it out to the team, and I think everybody kind of just like forgot, like, all right, we're just going back selling. And then next thing I know, I have 2 weeks booked. I mean, I was traveling a good bit on meetings on my own, but I had 2 weeks booked with him, and just meeting with him every morning, and then pounding out like 4 or 5, 6 meetings throughout the days, hopping around. He's got like an AirPod in each ear, one on one call, one on the other. And like, that was so inspiring to me because, I guess I had that perception of a gray hair, old CEO executive. I guess it kind of shows our age that we're coming into actually.
Yeah, I got some gray hairs coming in. So.
Yeah, but like, to see him at basically my age doing this, and his story about how that's what I heard from him a lot. Like, we were a lot of Ubers. We had to go out to like Jersey, and we took some longer trips too. And so we're in these Ubers, and he's just telling me about like how it came about, that he basically put it all on his credit card at the beginning, and how many he even showed me how many miles he had on his Delta app. It was like insane. And I don't know that, and then being successful at what he asked me to do. And then COVID, and we had to make a decision, and I had another income stream that I thought was going to be good. I didn't know at that time how good it was going to be. It was just kind of, it all came together at once. But I think the key piece of it is the confidence that I gained from like one specific conversation that kind of summarized everything that I was able to do. And again, I was selling, but I'm not like, I'm not the coffees for closers guy. I'm not hitting 130% every month. Like, I was doing okay. I was hitting quota most quarters, but it was a whole new adventure. And I appreciate that leadership team for, whether they knew it or not, identifying my skill set to be perfectly suited for like business development and growing the channel. Like, I manage some accounts now where I am, but like I was kind of brought in to like expand that, and not just because of the network I created, but my ability to go and find new network in that. So I would say that, and that's what I had a passion for all while I was trading. I love trading too. I definitely have a passion for that, but there's something about like doing business that's a little bit different than sitting in my basement here staring at monitors and crazy lines and technical analysis and stuff. So it really came down to, my wife was like, look, you're not even 35. I've made more money each year of my career since I started. Like, last year's gonna be a tough year to beat, but now we have a really good foundation. We can look at what we're gonna do and how we can even expand on it. So I went and found startup, try to get in really early, kind of similar to OneTrust, grab a big chunk of what I could of it. And have kind of a strategy to have the ability to negotiate more from where I produce. And it's been great. Again, I think we found something that solves one of those main challenges. So from BDR, we have some BDRs that I'm working with now, and I tell them that story. Like, look, they just got promoted. I was like, I was a BDR, and I've been on this wild journey. Like, go where you're best. Go wherever you're best, I think is kind of what I've learned.
I love that, man. So yeah, let's switch gears here a little bit. So you're crushing it. OneTrust going big, building channel. COVID hits. We all get sent home. We all get put on twice daily stand-ups, and kids are at home now too, and maybe another on the way. And so we're starting to think about what should you do next. I think you talked about maybe building a consulting business. Yeah, at the same time you're trading on the side, and now we hit this incredible bull market. Can you talk about that decision to hang up the startup saddle and move into kind of working for yourself?
Yeah. So again, like that culmination of things happened, and then with COVID, I think I went from like Monday through Thursday on the road to Sunday locked in the house, right? So I guess I kind of realized what I was missing, and so while all those things lined up, like that to me was most important. When my first daughter was born, I was in London for a week on her 4th week of being alive. So I was like joking with some people, I've been like out of the country for a quarter of her life, right? Yeah. And now you start to think about that and the things that you missed, and now watching my younger kid grow up, like be born, and kind of go through that, I'm like, oh, I don't remember Charlotte doing that. Lindsay was like, well, because you weren't really here very often and you were working a lot. And so those things kind of those types of feelings started to come in, and it was most important there. But yeah, with the market, the consulting business, again, I think that we really identified some challenges, and I was like, if I can just figure out how to pick this model of which works. I mean, there's lots of use cases where this works. You get this model of where you just basically implement a tool that solves a problem, but you do it for medium to small sized businesses, and you hire kids right out of college and teach them how to use the platform. And you bring them in, you bill them hourly, or you pay them hourly, you bill your customers hourly. Like I was doing like these startup kind of boot camp things and all that, and it was really good, but I was like super overwhelmed. I don't know, I'm sure there's people that are gonna watch this that have started some companies, and at the beginning you're like, you think you have an idea what you're stepping into, and then you realize there are so many things behind the curtains that you had no idea needed to exist in order to be successful. So while that's happening, I'm still trying to create this like Amazon seller side. I'm trying to just run like all these verticals at once.
And just trying to find something that sticks.
Right. And the one that's most successful, which really happened before I left and gave me the confidence to leave, to fund the consulting business, the one that was most successful was the trading. Because I really put in the time to learn that. I had done it in the past, and I really went and revisited, found a new mentor, and a new platform, and some rooms and stuff that really got me aligned with the strategy that worked best for me. And so I kind of put the other things on the side. I still think that consulting business is a huge play. And now being in the channel at my new company and seeing it in a different view, it's a more of a single module kind of rollout vendor that can be distributed versus, OneTrust is pretty complex. You can't just resell that and move on. So yeah, that ability to kind of to make the money to fund all that was the reason. And like I said, I'll try to get back to that consulting thing one day. I think it'll be once I have a better understanding of building and selling startups, which is hopefully this is number one of many. I guess technically two, but I didn't get any of that cash cow of OneTrust. So.
Oh, we're all waiting. But count me in, Mitch. I'll run that services business for you.
I think you said that when we met last time, actually. Don't worry, I wrote that one down.
Consistent.
Take some time.
All right, so talk to me about day trading. What does that mean to you? You called it gambling as well, and just like I don't have a Robinhood account. I'm too risk adverse here. So you talk me through what does this look like in practice, and how do people manage their risk in this kind of situation?
Yeah, absolutely. So I guess I should probably start by saying I'm not a professional. Like none of this should take.
Not financial advice.
Like if you lose all your money because you tried this, don't worry, it happens all the time. So, but I'm not no financial advice, and I don't think it's gambling. If anything, it makes me better at gambling.
Okay.
As the risk management, but obviously it gets called that. Whatever. I don't care about the reputation of it. I care about money, and So basically, it's a pretty simple, dumbed down method of identifying 4 or 5 key factors, and being able to have the right risk management strategy tied to those things, in order and to do that consistently in order to be successful. So I mean, maybe once, but I don't even think I can confirm that one actually happened. I don't think I've actually not had like a green day on days that I've only traded by checking all 5 of those boxes. When I lose money, it's because I fail to check the boxes of the rules that I spent a long time creating that get adjusted every now and then. But as far as the trading plan, you have these key indicators, and then you have the risk management plan tied to it. So, for example, a lot of the things that I do, I typically, I mean, sometimes, like nowadays, the way I'm trading now, I know the names of the stocks. They're kind of like your blue chips and whatnot. But when I was, those 2 years when the bull market was running, these like just irrelevant companies, no idea what the name are. Some, I think technically under $5, it's technically a penny stock. So some under that, others larger amounts, but still just really crappy companies that merged. And it's all these people playing these games to gain equity and win money or to make money and all this stuff. So I don't really care what the company name is, because last week, typically the stock I'm trading, last week it was probably doing something in EVs, and now it's like, oh, bio, because we need vaccines. So now we're actually going to revert, or we're going to change course from building electric cars to doing vaccines, right? And so that hits news, right? And it gets caught up in the news scan, and then that starts and then you have this whole so the core of it is trading. Well, the most important thing is volume, especially for the sketchy stocks. Maybe it might make more sense if this is the point where you want to do it, if I pull up like a screenshot of an actual kind of So, do you want to
give me the basics here, Mitch? Yeah, let's do it.
Okay. Let me see.
And so, I mean, essentially, you have a investing framework where you're picking stocks, and then buying into those stocks or buying shares. But those stocks need to meet your risk criteria or check these 4 or 5 boxes. You're going to hold it for a certain amount of time, and then exit, and then make your money on it.
Yeah, so that's probably a key part I should mention, and would definitely define me as a day trader, not a swing trader or investor. Is like some of these, we're talking a matter of seconds, right? This one that I'm going to share now, let me know what you're seeing.
Nothing yet.
Says that I'm sharing. Oh, there we go. Is that it?
Oh, here we go. Boom.
Okay. So, yeah. This is like a perfect example. And like I was telling you earlier, when you have the ones that work, then you kind of just like screenshot them and draw them out here and stare at them and stare at them and stare at them and like until your eyes bleed. The mentor guy that I follow, he has like this saying that if you find one that works, like just stare at it until your eyes bleed, because history doesn't repeat, but it rhymes, right? So it's going to look exactly like this just about every time if you're checking the boxes. Mm-hmm. So we start here. I'm going to look over here so I can see it a little bit better. 9:30 is market open, right? So there's probably
expand it. Yeah.
Oh yeah, there we go. Perfect. So 9:30 market open, right? I've already been looking at stocks, probably starting around like 7 a.m. You start to get alerts, and then within this platform, there's some chat rooms that have breaking news and whatnot. And the breaking news says, okay, there's some news on this, so that you've checked one box, right? And then you look and you see like, so I guess I screenshot it when the market was closed, so it doesn't have this data. But the float, like how many shares available to be traded, is a low float, right? So that you're looking for like a short squeeze, basically. You're looking for the buying pressure to obviously outweigh the selling pressure. But what happens is because the float is low and the shares available to be traded are lower, that means that the demand immediately gets higher for those shorted shares, right? So that forces the price up. But that is I guess that's more like theory behind it. I don't care about that at this moment. I'm looking at news and key levels. So I've identified, based on maybe the daily chart, which I can't jump around, that this this 50 or 5 cent level is a key indicator. We need to break this resistance. So we get over this resistance, and now we see, okay, we like that. So it goes up, and now this resistance becomes that support. So when it comes back down, like I probably wouldn't have bought here. This is more of like the an example of one that I think they sent. I wouldn't have bought here. That's just not me. I like to see some proof. So it broke out above this level where this guy bought on the first one, and then it came back down and it stopped on that level and it did not break below it. So now when it gets back to that new high, like that's game time. You know what I mean? So if that's checked all the boxes, the news, the volume's high for this early in the morning. It's in a good sector. So like, I don't know what this is. Green Globe International, that could be a lot of things, right? They probably do different things depending on the market. So you have the sector, and then you got price action. So again, that price action coming down here, and then the float being low. I don't know if I said that one. So it's 4 or 5, and then it just takes off, right? So my initial strategy was like, take massive profit immediately. So I was putting like, I can't believe I'm saying this live, but I was putting like 50 to 60% of my portfolio or of my funds capital into like trades that I thought would do this, because I was trying to make as big a trades as possible. Well, what happens is when you do that, even when you follow your strategy of where your stop should be, that's a massive loss. But if you make it and you do, okay, 5 to 1, let's just say this is $1, right? And I want to put $1,000 to this. I'm only going to let myself lose $10 on that stop. So whatever amount of shares that cost me to lose $10, that's all I'm going to do. And then when it goes up to $50 profit, I'm going to take it, right? So those are small numbers, but just easier to understand. And then sometimes that's what I was doing initially. Or after I was doing the big ones, I started doing the smaller ones with good risk management. But then I started reading all these books, and like you start to learn like the best traders aren't the ones that have tight stop losses. They're the ones that like can let their runners run, right? So you get this initial win, right? And by here, I'm probably mostly out early on in my trading. Like when I say early on, like the first like 6 months, I was probably out here. Hell yeah, good trade. Let me go find another one. What I started to learn is like typically you run on momentum. If it's a good one in the morning and it has the good morning patterns, and then it holds within a channel throughout the day. This is probably about 2 o'clock, I'd imagine, right around here. Yep. So 3 o'clock, 2:30. That's right around this time when it starts to break out of the channel. It puts more pressure on the shorts to get out, because they know, because of the float number, that there's going to be more demand for those shares based on the volume that you see coming in as it's starting to break the highs. And then I think over the next week, this continues to do this. So as long as the day, like this chart is, for a lack of better words, sexy, because it breaks in the morning on probably all the things that I needed it to, and then it hits that new high and it comes back down and it sets a solid base, right? So right here, there's no trading here. You're not doing anything. And even like right here, some people will trade this because right here it's starting to break the high again. But if you do that, you're only messing with a little bit. You're never going to hit your 5x, but you're likely to maybe hit your 10 under your $10 or versus the $50. You're likely to hit that down here. So now you're just basically guarantee yourself a loss. But when it starts to chop all day, and then it breaks that high with this happening in the morning, the volume and all those other boxes checked, I mean, if you're going in, this is 9 cents and this is 10 cents, right? So, I mean, you put $500,000 on that and it moves a couple pennies, you're willing to do that. So, or that's a risk you're willing to take, because you have that stop loss so tight that, let's say you're willing to risk a $50,000 loss to make $500,000, right? I never had single equity trades that big, but I mean, it happens. I mean, I'm in these rooms with these guys that are trading like multi-million dollars on these exact setups, right? I don't have the heart rate to do that. But it's very interesting when you're in there and you watch people do it, because some people, they are so dialed into their strategy and their risk management that it doesn't matter, because they know that they can afford that loss. And again, before I did any of this, is I went and I formed an entity, right? I went and met with an accountant. I was like, how do I take advantage of the tax breaks here? So I actually have a partnership where all of our capital goes through there. I just pay myself out of the partnership as the managing partner, and I am able to file what's called mark to market. So essentially, at the end of the last day of the year, whatever that position that you hold is, like, so this GGII, whatever you hold, that's what gets your loss or gain is based off of, that number at 0 or 59 on the last day of the year. And so that, by doing that, you're able to write off all of your losses. Like if you were to start trading right now as an individual, you can only write off $3,000 worth of losses. So that happens like right here in the morning before the market even happens. You're losing $3,000. So you have to be able to capitalize on the losses. That helps actually a lot, with the way that the taxes work this year. For us, it kept us out of the tax bracket because I had such a large write-off, which was terrifying. But without that mark to market and without me kind of setting that foundation initially on what needed to happen in order to make this like a real. So another key part, you brought up Robinhood, like they changed the game. I think I had a Robinhood account at one point, but like what they did by creating the free commissions, like I was trading right out of college, but it was like $7 per trade. And sometimes I was like trading $10. So that doesn't make sense. And so what Robinhood did in the market, it affected the ability to trade. And that's why you saw this surge of retail traders, because now people, I don't use Robinhood. I use a couple different ones, but they all have free commissions now because of what Robinhood started. So they really shifted the market from that. And while it's that the order flow thing, the price per order flow, I don't know the exact term, that you're delayed, but really where that's important is if you're like a major hedge fund moving like, $500 million worth of stock in a millisecond. That's where that payment for order flow really matters, because you have to be filled with that at that number or you're messing with huge margins. But for me, a retailer trader, and all these retailer traders that are trading under, $100 million, it's irrelevant, because if you set your strategy accordingly, you're setting it based on where you're going to get filled on the payment for order flow versus where you get paid, where you would get paid on if you were the first to the buy. But that to me, it's just that's part of it, but I don't think it's relevant for retailer trading. Some would argue differently.
Won't be me. All right. So Mitch, let me play this back. So your kind of the infrastructure here, you are part of some trading groups. There's some technology behind the scenes, and what that tech is doing is it's kind of monitoring the news, looking kind of see what's trending or what's people are talking about, and it flags that up and says, hey, someone's talking about this stock, right? You then favorite it, you said let's watch this, and you're looking to see what industry it's in, what are they talking about, and what price it's at, or what it's pre-trading at. And then once that happens, you're like, okay, the market opens, and it's kind of met those 4 or 5 key criteria, and then you're going to buy some of that stock in it, and you essentially have within your strategy some floors where, hey, if this stock tanks, I'm only going to lose X amount of money based on what happens there, but there's some strategy behind how high this could go based on how it's trending. And so that's kind of what you're seeing, kind of that buy one. When it comes up and comes down, that might be a typical pattern that you're looking for. And that could then signal, if it starts going back up, that this is going to continue to drive the price up. And that's where you start to make your money, is that.
So buying on strength, you hear everybody say buy the dip. Like I buy, peak highs. Like when I look at a daily chart, so this is an intraday. A daily would be like over a year. And like if it has all of these things, plus it's like on a 52-week high, oh, for sure going in on that one. Because you're buying strength, right? Like you're riding that wave. But that's where it becomes trading and not investing. You'll see people that do that. They get this big profit. Maybe they bought here. It gets up here. They sold nothing along the way. And then because this is a crap penny stock that was a EV maker last week, it tanks to nothing. And these people take all your money and they move on to their next project. So that is where you really got to learn to take your profits. But you got to balance it. To be really good, you got to balance it with letting your runners run. So that's why if you buy on strength, you can typically feel the strength all the way, right? Like I'm buying here when it's going up. I'm buying here when it's breaking. Buying here again when it breaks. Buying up here again. So now that I'm doing that, you know, I have the ability. I've probably averaged into right here. I have the ability to set this stop here without even hitting a loss yet. And you can build on that momentum. So you know if it breaks below here, you've lost strength. So sell and take your small profit. If you held on, you know, if not, you're selling along the way. Selling along the way helps to fight FOMO too, because sometimes you'll make this big win. You're like, oh man, great morning. And then you watch it do this and you're like, oh man, do I want to get back in? But if you wouldn't have sold them all here and you would have kept some, that FOMO is a little bit easier to manage.
Got it. Yeah. So you might buy 100 shares throughout the day, depending on what action it's taking. You might sell a little bit, take some money off the table, mitigate, you know, your exposure to it, or as it's, you know, continuing to climb, you might buy more in, and that's buying the strength.
Correct.
Got it. And so on any given day, how many, you know, stocks are you getting into? Are you getting out of? And what does that look like?
So like December or no, like June of 2021, like as many as I could. It was kind of unlimited. It was like I would be done working by 10 a.m. because like while earlier on I would be, you know, kind of waiting along in the afternoon for this, but like in the heat of that bull run, like late 2020 and early and mid 2021, it was like I was trading the pre-market. Sometimes I never even traded after the bell opened because I was like, I hit these, and then I set myself, you know, once I started getting serious and really started making some money, it was like, okay, when I hit this amount of profit in a day, I stop. That is the rule. And then I got from doing some seat time and just trading from my phone, and then kind of slipped up a little bit. So I was like, okay, now I'm only going to trade at my desk, which really started to help. And when I started following those rules again, that worked. And then crypto happened and everything changed. So this doesn't really work the same as crypto, but found some very interesting things that did work with crypto that really changed the game and allowed me to kind of just, you know, take the next step of my career and say, okay, now what do I want to sit back and try to figure out what I want to do? And that's how I ended up, you know, where I am now. But that was because the crypto thing. I mean, do you want to dive into kind of like how that works versus how this works?
Yeah, man. And if you want to share kind of your story there.
Yeah. So I had stayed away from it. As sketchy as like penny stocks are, I kind of like stayed away because, you know, it's super easy to scam and I'm not super technical. So I don't understand, you know, how people can break into my IPs and all this stuff. And, you know, I was just always afraid of all the, I mean, some of these things were called like KuCoin and Pancake Swap. Like those are two main like brokers. Like something called KuCoin, you're like, this can't be serious. And so I was afraid of it. And then my buddy was like, look, we have made, it was a group before, he's like, we have made over like $5 million this year doing this between the 5 of us, 4 or 5 of us. Like this works. I need you to take a look at it.
Yeah.
And so I looked at it, and essentially what it is, it's like it's a coin IPO. And so this is ridiculous what I'm about to tell you. But this coin that he told me about was about to, you know, launch or IPO was called TARP. It's totally a rug pull. Okay. So rug pull is legitimately the main scam that gets done to you on these coins. You get in there, they blast up the price, and they don't let you sell. They lock the liquidity, and then they just rip it out from underneath you, and then it just disappears into cryptoverse, and you never see. You own the coins, but they are nothing but a number on your phone.
You can't sell it. Can't make your money.
You can't do anything with it. It's just, it doesn't exist. And so there's like honeypots, and then there's the rug pool. So this one being literally named after a scam, I'm like, I don't know. So I sat down and did like 3 or 4 days of just like living in front of the computer research on how do you buy, is this PooCoin thing real? Yeah, that's a real brokerage that I had to use in order to buy some of these things. So I had to download these wallets that would accept these different types of coins. And like, I'm not a crypto expert. Again, I'm looking on technical analysis. I'm looking at volume. I'm looking at trying to make money on somewhat risky opportunities. And so I was like, okay, I'll put 15,000 in on this, because you guys can usually spot the shitty ones, even though you admit that occasionally you come into the scams, which just happens. I was like, so for this first one, I was like, I'll put 15,000 in. I'll buy this. You couldn't buy the pre-launch, which those typically explode even more right at the get-go,
right?
Because of the fact that they're it's just not messed with before. So at the launch, like, I got my laptop here, I got my computer here, and I got the buttons ready to start clicking, because you have to get the buy order in. So I happened to get in really early. And then this thing, over the course of that day, I went from 15 to 150,000. And then over the course of like the week, got it over a $250,000. And then over the course of the month, like, was pushing up to $500,000 on a $15,000 purchase of a thing called Totally a Rug Pull. Like, no wonder people don't think it's real, because that sounds something out of a movie. But then I was like hooked. Like, I like penny stocks that run like 200%. You're telling me I'm going like 50? I don't even know what the percentage on that was. And so I started doing it, and what happened was I was strategic about it. I said, I know that I'm going to get scammed on one out of every 3 of these. And I got scammed on the next one. I didn't go. I kind of kept it at that $10,000 entry fee. Like, look, if it's going to explode that much, then let me not risk that much.
Yeah.
Wiped out, gone. See ya. $10,000 in an account, and then not in an account. Like that, as tough as losing in the stock market is, you're not ready for that, because it's like, then you start getting mad at people. Like, how do I find this person? And you realize you don't have the ability to do that. So you get back on Twitter. You're looking for that you following the right people. You look for the right next hot Totally a Rug Pull. I think one of them was called there's like Paracoin or something like that. Like, just random things that claim to solve real problems, but in the same way that stock claims to solve EV problems one week and then solve vaccine problems the next. So you got to understand what you're dealing with when you go into that. And after a couple of scams, I made some more good money on a couple other coins. But after the scams, it's not like you're risking 10% of 10,000. It's like you're risking all 10,000 that you put in there.
Yeah.
And that's tough to do, because then you start like eating into that. Like, I immediately notched that margin that I made on that Bitcoin down like that, because it all nets together and you lose. I got kind of carried away. And then in January of 2022, I was like, you know what? I had the best year of my career by far. I'm gonna take January off. I earned it. Just gonna not do anything. Not gonna look at stuff. I didn't even turn on CNBC, that was the hardest part probably. And I did that, and then I come back in like February 1, like, all right, time to get back to work. Well, one, I was doing it so much every single day, so consistently, that it was like ingrained in me. I took a month off. I was like, a little rusty, like forgetting steps or didn't check a box. I was like, feeling good about a stock. That's never good to do. Don't feel good about a stock. And so I started, and then the market just starts like teetering. And so I'm like, okay, I'm going to start playing with some, and then I actually shorted the NASDAQ from April to June. So I went more of a long term, which I never really shorted before, because short squeezes happen, and you get totally blown up. And so I decided, you short the Qs. That's ETF, right? It's not like that super risky, but it was a massive move down. Closed. I thought that I found the bottom, right? If you look at the QQQ on the daily, 289, it goes like down to 287, but 289 was like my bottom, and we're on that bottom right now. It's like 287. But about 2 months ago, or about a month and a half ago, it hit that bottom, and I switched positions. So I haven't had a long position over like a week, but like I definitely think that the market to this point has changed, and it's if it breaks back, the Qs go under 287, then we're really going to be shorting. But so there's like a lot of different things, but I was able to kind of draw it out to now I don't have to watch these and be in and out like consistently, even with alerts. You got like 7 different charts open, and then you're constantly in and out, super high stress to, okay, I see the trend on Ford. Like last week, Ford announced that they had the supply for chips to do these EVs for like the next 10 years or something. And their earnings call was 2 days later. Like typically I won't buy into earnings. That's like a huge gamble, which it kind of is. But with news like that 2 days before, boom, hit it. And if you look at Ford over the last week, it went from like 11 to 15, 16 today, right? Closed out that position yesterday. So I'm able to do these longer ones, but ultimately that allowed me with the longer trading to go get back into the industry, start wheeling and dealing in the channel. And like, I absolutely hit the ground running at this new company. I was very selective. Like I had to talk to the CFO before I came in. Like I was being pretty, to the point where they were probably like, all right, what is this guy doing?
Yeah.
But I found it because I found this company that I really thought was the one for me. And I didn't like apply. I just messaged the CEO on LinkedIn, was like, I need to work at your company because of these reasons. I laid him out and I was like, and you're hiring on that team. And he was like, send me your resume. And I went through like 6 rounds of interviews. And I'm proud of that because I never even actually like applied for the position. I just found the job that I wanted, found the guy that can make it happen, and made it happen. So that gives you a lot of confidence going into like a sales role again,
Yeah. Like a true salesman going after it.
Yeah.
I love it, man. That's awesome, dude.
So I know that's a lot, but it's been a lot going on. So
no, it's cool to see and cool to learn about. I mean, frankly, I've never seen any of this stuff. So this is awesome. So I mean, what's next for you? So back to startup life, I got the family, and you think you'll ever go back to day trading? How's your golf score going?
Playing less golf now I'm trying to play golf, but no, I think so. Like ultimately the plan here is right. Like, so I'm going to use this time at the company Black Kite that I'm at, which has this, I'll say it. We're competing with the likes of BitSight and Security Scorecard. So we're a security rating service for your third parties, except we're better because we have better technology. And I actually looked at those companies, Scorecard, when I was looking to apply. And this thing, some of the things that we offer, I won't go into too much detail, but that challenge that I told you we were trying to solve for assessments back at OneTrust, they have this tool called this unique parser tool that essentially will take any documentation that you have, run it against 15 different compliance and privacy frameworks, and tell you how compliant you are. Like if you give that to somebody that does assessments and says, just input this documentation, even if it's a questionnaire, like get your questionnaire answered, and then instead of mapping them individually to multiple frameworks, just plug it in, and within like 2 minutes, it'll be completely mapped to 15 different, and you know how complex those frameworks can be. And so the ability to do that within minutes, we had one of our major customers, Fortune 100 customers, they had like a 7-week assessment lead time per vendor. And we got it down to 1 day, 6 hours. So I think that's how powerful this engine is. And I think, I'm in kind of a strategic role to expand that within the larger consulting firms that are doing a lot of the assessing. And so I got equity there. It's they have a clear path to me gaining on that equity or capitalizing on that equity. And then this leadership has done that with like 5 other companies along their journey. So I'm learning from that, and maybe it takes me into that again. But at the same time, me and my wife in that limited partnership have plans to buy a rental property every year for the next 10 years, right? To start really, basically what I want to do is at 55, like let my wife let me retire, right?
Yeah.
So I know I did this back in my 30s, but like, let's do this the right way. And I just want to, I'm trying to just grow in a lot of different ways. Another thing that I want to do is like a VC, right? So I have the full foundation of a VC business plan. And now it's just about educating myself on maybe it's startup in this industry, maybe it's more of a real estate play, but understanding the foundations of it and getting the knowledge along the way, being able to identify a good company to invest in, to get my firm to invest in and sell my investors on. Those are all 10-year plans within the next 10 years. So a lot of different routes, and I'm sure I'll drop some and maybe pick some up along the way, maybe revisit other ones like the consulting business. But just trying to build a portfolio. I truly feel like that trip to New York, like I went from being like a sales rep to like a business person. Yeah. And that's that changed. You probably hear my dog whining. Sorry. But that's when everything changed. And now I have this whole new outlook. I'm way better now in my role than I was in my role then, because I've spent the time to really develop my personality as a salesperson, instead of like, this is how you sell, this is how you're supposed to do it. Like, no, fuck that. Like, I'm going to be me. Like, and that's what has been most successful, and having the knowledge of the industry and being able to showcase that. And then just being myself and not getting stressed out about why didn't this person email me back, call me back. I've found myself in emails now, even Nick, I eliminate words. I'm like, this word doesn't have to be there. Like I'm more or precise. I say, will you sign this today? Or sign this today. Not, hey, good to talk to you last week. Do you mind checking on the status of this contract that my rep sent over a couple? No. Hey, will you sign this? The guy's going out of town tomorrow. I sent that email today. We got the contract closed today. So, and I'm trying to teach some of these younger guys, which is pretty cool to see them kind of like come to me and ask me those things. It makes me feel old again a little bit, but like it's because they hear me the way that I talk to them, and then they see what comes back from it. You can't fluff this. Like, it's, again, becoming a businessman. Sorry, Jake. Sorry. No,
man, I love it. The dogs are barking here, so I think that's our time. But Mitch, this is amazing. You have me hyped. I'd run through a brick wall for you right now. This is,
I get kind of excited about it. So sorry,
No, don't apologize. This is awesome.
Passionate. And again, just want to make it clear, if the totally a rug pull thing didn't make it clear, I'm not a professional. You should not take any trading advice from me. So
yeah, I'll put it on the screen too. Yeah. But Mitch, where can people find you if they have questions? And
absolutely. As kind of a personal thing, I'm on Instagram every now and then. Probably not going to be able to. I don't check it very often. LinkedIn is now. I just scroll through LinkedIn instead of scrolling through Instagram. Like I said, switched over to business person, I guess, and just like scrolling through LinkedIn. Mitchell Wall or Mitchell.Wall at blackkite.com. If you have any business inquiries, or just mitchellwall@yahoo.com if you just want to ask about trading. I won't take your money to trade for you, and it's probably best for you. But yeah, anything else? Do you have any questions? Anybody has any questions? I'd be happy to chat, invite you to some chat rooms and hear what live trading is all about. Or if you want to learn about how we can better help your vendor posture and how their ransomware susceptibility is. I'd be happy to show you that too.
Love it, man. Awesome. Well, thanks everyone for watching the episode. If you made it this far, give us a like, give us a subscribe. Reach out to Mitch if you have questions. Leave them in the comments. I'll chase them down. I'll make sure he answers them all for you. Mitch, again, really appreciate it. Thanks for coming on, and we'll have you on for a part 2.
Yeah, thanks a lot, Nick. And I meant to tell you, thank you for sending me that. I shared that video out that you shared with me on LinkedIn the other day. I shared that to my company. It was very, very valuable to the product team. So
yeah, hey, I'm always hunting for you.
I sold it as one of our partners sent us this. So
yes,
it was well received. Thank you for that, Nick. I appreciate the time, and looking forward to the next one.
Awesome, man. Thanks so much.
All right, man. Take care.